AMD stock is down roughly 7% year to date. And after reporting earnings, this stock pretty much crashed because they are not meeting analyst and earnings expectations. Now, historically, I have been bullish on AMD, and I believe I was wrong. I was wrong because back then I wasn't that bullish in the AI accelerator market. But after this most recent earnings, that has become one of my biggest reasons to be bullish on AMD. Now, like always, I don't believe this is the next Nvidia. Now, I want to explain a little bit more in today's episode why I believe AMD is actually pretty cheap right now, why the AI market is going to be a big driving force for them this year alone, and why this stock I believe will be one of my best performers this year. But before we go any further, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment for a special offer at fool.com/Jose, and check out my free daily semiconductor newsletter, whatthechip.happened.com. Link is down below.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
If you are familiar with this channel, you guys know NVIDIA is my #1 position. Now, AMD used to be my second biggest position, but now has been overtaken by another due to the overall gains of the other and the loss of AMD. But AMD is still one that I'm very, very much bullish on. Now, I'm going to say this, like I say this in every AMD video, I don't believe AMD is the next NVIDIA. I don't believe AMD is going to be a $1 trillion company anytime soon. I do believe AMD will outperform the overall market, the Qs, and even the semiconductor market in the long term of things. And that is why I'm willing to invest in this company right now. Now, historically, I said that AMD's biggest bullish scenario is that it was very diversified in a lot of markets, and all those markets can be a nice tailwind for future growth in both terms of revenue growth and, more importantly, earnings per share growth, which would give this stock a very, very cheap PE ratio. Now, one of the things I've mentioned is the AI accelerator market was not the biggest growth reason for me, but that has changed ever since the most recent earnings. But first, I want to take a closer look at valuations. PE ratio forward, which is the next 12 months, is sitting at 23.55. PE ratio forward 1 year is 17.62. I mean, I personally believe there's not many stocks that I will see growing in revenue, growing in earnings per share, and sitting at this cheap valuation. If you can name some, let me know in the comments below, because I'm always looking to find some great investments. Now, the other thing that we're seeing is this is a company that has plenty of cash and short-term investments, $5.1 billion in cash, $1.7 billion in debt, and trailing 12 months free cash flow of $2.4 billion. In theory, this company can pretty much pay off all its debt with this trailing 12 months free cash flow. So overall, a very, very healthy balance sheet, especially during a market that has been very slow for them. The reason being is AMD is dependent on a lot of different industries. And some of those industries are in the consumer and the PC client and the embedded market, the industrial market, which are still pretty much in a downturn. So during kind of like a bearish market, you're still able to have strong cash, strong free cash flow, and not much debt. That it screams a great balance sheet and a great control of finances by management. Now, the final thing I'm going to look at, and I know this is boring financials, we'll look at the overall tech and what we're really here look to see. But for this fiscal year or 2012 months, the company made about $26 billion. Now, for the current fiscal year, which ends in about 12 months from now, the market is expecting about $31.8 billion. So about a $6 billion growth in about a year. So $6 billion out of $25 billion at a previous 25 billion, that's about an extra 20 to 25% revenue growth year over year. I don't believe that is impossible, right? The company in their AI chip market, right? There are various industries that they have. They have the AI chip market, they have the embedded market, they have the gaming market, and they have their overall just data center and CPU market as well. Now, in the AI chip market, I believe they can easily grow $3 billion versus this past year. So that's already $3 billion that they can meet expectations. Now, the PC market, the server market, the embedded market, and the gaming market are all expected to grow as well this upcoming year. And I'm pretty sure they can do $3 billion there. So without doing any crazy math, just looking at understanding the markets and potential revenue growth, you can already see that they can easily beat expectations this year. And I think they're going to easily do it. I mean, we can see in their most recent earnings, they mentioned that for 2025, they expect the demand environment to strengthen across all of their businesses, driving strong growth in their data center and client business and modest increase in their gaming and embedded. Against this backdrop, they believe they can deliver strong double-digit percentage revenue and earnings per share growth year over year. Strong double digits, I don't think strong double digits 10%. I would consider strong double digits something above 20%. And above 20%, you're already getting super close to that kind of expectations that the market is seeing for the next fiscal year. Now, if you are familiar with AMD, they are usually very conservative. So I am very conservative, in my opinion, by thinking that they're only going to grow 20% this year. Now, for investors, it's also important to remember that the first half of this year is still going to be a little bit wacky for AMD, as usually quarter one and quarter two are the slower seasons for the semiconductor space. Quarter three and quarter four are expected to see a lot more growth. In the PC market, they expect the PC total addressable market to grow by mid-single digits year over year. But because of their overall leadership client, they believe that they can grow their client segment revenue well ahead of the market. One of the main reasons is the Ryzen Power Dell commercial notebooks are planning to launch in spring this year. They also continue to get massive market share gains from Intel. Now, I mentioned in the past that I really wasn't a fan of the MI300, and the one I was really waiting for was maybe the MI350, but more specifically the MI400. The MI325 was just a kind of MI300 in steroids, so I really wasn't too excited about it. Now, AMD did give us some great insight. They mentioned that the MI350 is progressing ahead of schedule. They are getting great customer feedback, and because of this customer feedback, they plan to sample lead customers this quarter and are on track to accelerate production shipments to mid-year. So here they're seeing both new hyperscale customers and existing hyperscale customers giving strong engagement. Now, to me, this is very bullish, as a new hyperscale customer can easily help AMD grow $3 billion in revenue per year on their MI350 sales. So if this MI350 does amazing, and by the looks of it, it's going to do amazing, especially since they're ramping it up earlier than expected because of the great traction, then I think this is going to be the ultimate jaw dropper for Wall Street. So if there was one reason to really be bullish for AMD right now, it is definitely the AI accelerator market. But like I mentioned in the past, you have their Ryzen CPUs, their EPYC data center EPYC CPUs as well, that are all gaining market share. And then as we saw from their guidance, the gaming market and the embedded market are expected to pick back up modestly, not some crazy growth. And all those numbers can help easily beat that $6 billion revenue expectation growth for this year. More importantly, help get those earnings per share numbers higher. And we're going to see this as a company that is going to be trading at pretty cheap valuations if the market doesn't understand AMD like I do. So let me know your thoughts in the comments below. Take care, have a good day, and see you all next time.